Hi, this is Zak Mir from Zak's Traders Cafe with a look at some bulletin board hero stocks on Wednesday, the 27th of January. Starting off with an old favourite, AFC Energy, where there's been decent support off this uptrend line from April, and then the breakthrough the 50-day moving average 26.06 over the last couple of sessions. Also, this RSI rebound through the neutral 50 level. So momentum getting positive here. And the idea is that while there's no end of day close back below the 50-day moving average, we could head up to the main resistance here towards the 200-day average and this line of resistance from last year just around the 39 to 40 pence zone over the next 2 to 4 weeks. At this stage, we're only back below 20 pence. Obviously, the main support of the last couple of months would be outright negative for the shares, but that doesn't appear to be likely anytime soon. APC is next, and here we've got sort of an extended attempt to find support here around the 50-day moving average, 8.66 pence, also towards the 8 pence level since the beginning of December. The idea here is that even if the shares fail, we could see a spike back towards the 10 to 12 pence zone. That was also the floor of this gap to the downside area as well in August, and just it sort of gives the impression of an attempt at recovery here. Obviously, the big buy signal here would be a break of this June resistance line around 11.5 pence coming in towards the first half of February. Nice uptrend line also in the RSI window to back the idea of recovery, and the stop loss really back below 8 pence for people who are close to the money, or back towards the 7 pence zone November support if you want to give this situation a bit more room. Metal Tiger is next, and stock which has lots of coverage and lots of interest as far as the private investors are concerned. But obviously, as you can see, since basically April last year, the shares have not really done very much in a range between sort of 0.8 and 1.1 pence most of the time. Looks like we've had a nice little bear trap rebound from below the 0.8 pence zone over the last few sessions, and that could be enough to take the stock back up to the top of the range at 1.1, 1.2 pence. Be cautious on the situation, obviously wait for an end of day close back above the 200-day moving average at 0.91 pence, but the break of RSI 50 over the last couple of sessions is a decent positive and a leading indicator on a little run to the upside. MX Oil is next, and well, I was kicking myself, or I have been kicking myself for not getting into this as a bottom fishing situation earlier on. The RSI went down towards 10 out of 100 last week. The situation at the moment is that we're looking for an end of day close basically above the 50-day moving average of 1.9 pence to really get this situation going, but breaking back above the 20-day line yesterday at 1.4 pence is a decent buy signal, obviously in the wake of the bear trap gap rebound that we had last week. Target now towards 2.5 pence, as I have been suggesting before, and for aggressive traders, basically while we hold above the 20-day line, but they would be assuming that 2.5 pence is on its way. And Condesi Energy, the next stock up. I've looked at this a few times before. The reason for that is this encouraging break to the upside that there was in December. So the break, sort of a break in December, bull flag, and then a break through that as well. And it looks as though, at least while we're above, let's say, the 4 pence region, the stock could retest January resistance at 8 pence over the next 2 to 3 weeks. Stop loss on the situation back below the 50-day moving average at 3.21 pence. Finishing off with Orosur Mining, and we're looking at, well, effectively triple support for the stock at and just below 5 pence. And while we hold above that, back up towards 8.5 or perhaps even 9 pence for February. The clearance of the 50-day moving average of 6.03 pence is a plus, as is the push through RSI 50 to leave it at 53. So more encouraging there at Orosur Mining. all of this within this slightly falling price channel in place on the daily chart since March. Stop loss, obviously, a weekly close back below 5 pence as we await 8 to 9 pence. That's it for me. More updates at the same time tomorrow.